And a good morning to you, ladies and gentlemen. This is Butch Shorak, Options University, Monday, May 21st, 2012. Let's take a look at the week that was and the week that's to come. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit, and it is you that must take responsibility for your money and apply principles so that you can do this in a consistent manner. With that, let's take a look at the economic announcements that were. And as we look at last week, we see that we had very little on Monday. We had a couple things on Tuesday. Retail sales were sitting there. Basically, there was no big thrill in anything that came out during the week. Friday, there was nothing as far as economic announcements. Jobless claims basically were a non-entity. Philly Fed survey was actually no big deal. None of these things actually affected the market all right there. But then on Friday, we found out what they were talking about all week. And it looked just like Facebook. The biggest IPO that's come out in a long, long time, probably the third biggest of all time. And it was the entire talk for the entire week. And the bottom line is that the economic announcements meant very little as we went through the week. And the Facebook announcement came out, jumped up a little bit, fizzled a little bit, and basically closed where it opened. Not much of a day for Facebook to open as the market pulled back, as it has consistently done for the last few weeks. And we'll look at that as we go through the rest of our slides. Looking at economic announcements for the coming week, we see that on Monday, not much. Tuesday, same-store sales, existing home sales. Richmond Federal Manufacturing Index probably won't move the market very much. Not all that much on Tuesday, as we can see. Home sales really don't move the market much anymore. Again, the week of sales and home announcements and numbers, FHFA, House Price Index. And so we see a preponderance of housing on Tuesday and Wednesday. Probably won't do much to affect the market. Durable goods on Thursday morning. Jobless claims, which occur every Thursday morning, have really pretty much been in line, not affecting all the market that much. The big one is consumer sentiment on Friday after the market opens at 9:55. So basically through the week, you'll find that we don't have a whole lot of economic announcements. We find that the earnings are pretty much done. No big earnings coming out. And Hewlett Packard is still coming out shortly. But other than that, we don't see a whole lot of stuff coming out in economic announcements. That isn't what's going to move the market. So what are they focusing on? They're focusing on Europe. They're focusing on Greece. They're focusing no longer on Facebook. So we've got this for them to focus on and this for them to get to worried about. And we're in a market that absolutely is about as oversold as you can be. As we look at the S&P, we see that we have been down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in a row. We've been in a down cycle. All right, that's a lot of days. Are we oversold? Well, if we look at our index, our market forecast, we see that all three of the different time frame lines, the momentum line, the near-term line, the intermediate-term line, which focus time frames from 1 to 2 days, all the way out to weeks to months, and they are all below that 25% number there, which means that the market is oversold. All right, do we see anything coming? Is there relief in sight? What's going to make the market turn around other than it'll get cheap enough where finally they'll begin to buy? We've got a 200-day moving average down here at 1278, and we very well may see that before we get our bounce out of the market. So watch that key number. If you see capitulation, remember what capitulation is. That's the day where you watch the market and you see the selling take place so heavy and so hard that you want to throw up. That's your capitulation day. That's the day that you want to get back into the market on the long side. As it currently turns out, the risk to the downside is also severe, as after 13 days in a down cycle, it is time for a bounce. So you're kind of in no man's land here as whether you're getting any kind of signal. You haven't had a confirmation to go long. All you're seeing is lower highs and lower lows, and we may actually continue to that 200-day moving average. We'll have to see and watch this carefully. This will be an indication of when our momentum stocks will start heading back up. And have they been damaged? Well, that's what we'll go and see as we continue on with this little talk about the market that was and the market that will be. There it is magnified. Again, the SPX. We see that it closed down 10 on Friday to 1295. And we see that there's all those red candlesticks. Just keep right on heading down. All right, and there is our 200-day moving average right there. So then we could be going that far. We just broke through another support level at 1300 to close at 1295. And remember, we don't have confirmation of a reversal until we get higher highs and higher lows. Could news cause that? It could. Something's going to trigger them to start buying, but so far we haven't seen that pop back up. All right, tough week for the market as we looked at the last 5 days. Big candlesticks and on relatively strong volume. So this was not a weak move. Particularly look at that Thursday move that went down to that next level in support and then broke it on Friday on the opening of Facebook, which didn't help its IPO in any way, shape, or form. All right, taking a look at the Dow, we see that it looks the same. This is the week that it broke out of its trading range that it had been on, went from a sideways trend to a downtrend. So we're currently in a downtrend. If you're in a downtrend, what is your next trend? Well, it's obvious. The next trend up is going to be a sideways trend. Not an uptrend, but a sideways trend. What do we do on a sideways trend? We spend time above the moving average and below the moving average. Which moving average do we use as an indicator for that? We use the 30-day moving average. So will it bounce back up to that 30-day moving average? Of course it will. When? That's the question. So far, all we're seeing is lower highs, lower lows on the Dow, which is following the overall market index, which I like to use, the S&P. Looking next at the NASDAQ, we see that it has let us back down a little bit quicker than the Dow did. As you see, it broke out of its trading zone and just continued right on down. Looking at the last 6 months, we see here's the first of the year right here, and we see that we're giving back a good share of what we gained. More than 50% has now been given back of what had been gained from the first of the year. 200-day moving average is a little bit closer for the NASDAQ than for the Dow, and we'll see which of them gets there first as we're still in that down cycle and downtrend in the NASDAQ. Russell 2000, we see that it is pulled back. It actually broke the 200-day moving average right there on Friday, and it has let us down. You can look to the Russell to see if it could give you some kind of indication when the other market will pop. Many times it will precede the other markets in its pop-up. Keep an eye on that Russell, another good indicator for you for what the market's doing. VIX broke out of that favorite trading range that we have between 20 and 14 for the VIX, and we see we are up in the 20 to 25 range now. A little more volatility in the market, and of course that always happens when we start heading down. How high are we going to go? Well, we'll have to wait and see. We didn't move all that far on Friday between closes on Thursday and Friday. Not that big of a move, but the fear index is definitely coming into the market a little bit more as we see we have popped out of that comfortable trading range of 20 to 14, where it spends 85% of its time. Looking at the bond market did exactly what we expected the bond market to do. Actually went to new highs as it broke above that Thursday and Friday. Broke out of that previous trading zone where it had spent months. And we see that the bond market is having its last hurrah. As the market pulls down, the bonds money are flowing into bonds, kind of that safe haven. We look at a TLT, which is our ETF for the bonds, and we can use that as an indicator for what the overall bond market is doing. Next, take a look at the financials, and we see the financials. If the overall markets pull back, we do expect the financials to pull back. We see that it was. This last week looked like that, and led by JP Morgan, which is still dealing with its huge trading losses. Ever notice how those big scandals seem to come off the London exchange? May have different rules there than they have in our U.S. exchanges for trading, because it seems like we've heard this scenario before. Looking at the ETF, the XLF, down 1.1% on Friday, down 15 cents. As we see, we are rapidly approaching that 200-day moving average in the XLF, which talks about the financial sector of the market. All right, looking at oil, we see that oil, as far as the USO, is just descending down further and further. Also associated with this, we see that the dollar has increased in strength, so that could have an effect on us moving forward, because as the dollar goes up, it is more difficult for us to export goods. So all these things are tied together, but we're in a run. We will get a bounce off of here, but at least I still haven't noticed a big change in pump price. I'm still looking for that $2.50 gallon of gasoline, which Newt keeps talking about. Let's get it done. Let's start using some of our own oil that we have in this country. USO, the ETF that's involved in following the oil market. We look at gold. We see that gold has been popping as the market's been pulling back, headed back up into that trading range. We've got resistance right up at about there. So we're approaching that resistance level with gold. We'll see how far gold runs, as it is one of those safe havens. GLD is our ETF for gold, up 1.15% on Friday, as we see gold increasing in price as the market is pulling down. Again, that's safe haven for one reason or another. All right, looking at the SPY, we see what kind of volume did we have. Big volume on Friday as we saw the market pull back. The largest volume that we've had in the last 3 months, and we see that it continues on down, headed for that level of support right there on the SPDR, which is the ETF that mimics the S&P 500, and the 200-day moving average is this average right through here. Again, will we hit it? It remains to be seen. Awful lot of down days in a row. Hesitation where we had that previous support right there, and then we see it just continued to go down like a rock without a parachute. So with that, we see that big volume on Friday. Could that be capitulation volume? Didn't feel like it. Could we get a reversal out of that? Certainly could. We are due for a reversal, as we saw with the overall SPX chart. But it has to give us confirmation, which means higher highs, higher lows. So far, all we're seeing in this down cycle and a downtrend is lower highs, lower lows. When will that bounce come? This is like catching a falling knife till you get confirmation. So be wise, traders, and protect your money from this kind of move. It could run down longer than you can hold out with your positions. So with that, for those of you that are not gold members, we're going to be signing off. For the gold members, we're going to look at our charts of our momentum stocks, of the stocks to watch, and see the effect that the last week had on them. In the meantime, for those of you that would like to hear more about free videos, you can go to www.optionsuniversity.com/free gold, FREEGOLD, and there is a little blurb on that at the end of your video, so you can copy that off of that. And with that, this is Butch Shorak signing off. We'll be back for the gold in just a moment. Options University, Monday, April 21st, 2012. Thank you for being here.